Hey traders, Raghee here, and in this video we're going to talk about directional bias and contrast and compare. Not that one is better than the other, but contrast and compare one of the things that I think a lot of traders struggle with, and that is a very simple decision. Do I want to be a two-way trader, which is basically open to longs and shorts within the same session, or would I rather trade one way, be a one-way trader, and stick with directional bias? And I'm going to show you why I am the latter. Not that there's anything wrong, but if you're struggling with your day trading, one of the simplest fixes that I have found is remove one direction from your trading. So you might end up flat, or you're going to end up short, or you're going to end up flat or long, but not short and long. So how do we determine directional bias? Well, the directional bias, yes, it will be influenced by the 1 minute chart, but normally, and probably 80+% of the time, I'm going to use the daily time frame to determine my directional bias. So we've had plenty of reason to stick to the long side for many, many months. But once the market started chopping around in this area here, it became a little bit more difficult. In fact, this red candle was the official day of calling the uptrend of many months broken. So once we have this choppy market, directional bias can be a little bit trickier. So every day I'm reassessing, do I want to be long only or short only? And for many, many reasons, we have focused still mainly on the long side. One reason is a broken uptrend is distribution with bullish bias. And the closer I am to the September value area low, which is what this green line is right there, I feel that we're more likely to bounce off the floor, and I'm going to keep bullish bias. The closer we are to the value area high, which is up in here, and I'm writing this in really small letters because I'm still mostly bullish, but I'm going to acknowledge the resistance that might be here. But the closer we are to the value area high, perhaps I'm going to be aware of some of the obstacles to the upside, and maybe at the points testing the value area high, I may be open to shorts. However, this morning, having opened above two key volume weighted average levels, so I have the VWAP right here, the volume weighted average price there, and this VWAP right there. We opened above both. These are both anchored VWAPs, and I use anchored VWAPs in order to understand where we are from a volume perspective. Having opened above both of them, I have a much more bullish directional bias, and I'll only be open to long positions. So think about using the daily time frame volume profile, meaning value area high, point of control, value area low, and anchored volume weighted average prices to get your directional bias before the bell even rings. So by the time the cash open is here, 9:30, the bell rings, I'm already looking for support or breakout levels or whatever I can see would be a bullish long setup. I'm not even interested in the shorts. So if you're struggling with your day trading and you're finding that some days you're trading brilliantly and other days you're trading brutally, try this one-sided approach. Don't be so concerned about catching every little zig and zag in the market, but try this directional bias approach. It's what I've been doing since the mid-90s in my day trading. And even though I've considered being a two-way trader, I have really enjoyed the way and the success of directional bias trading, meaning one-way trading. So give it a try. Leave some comments below. Give it a try. Give me some feedback after you've given it a whirl. And I think you're really going to find it's going to help your trading a lot. I'll see you in the next update.